Ethereum is gaining momentum again. With on-chain activity reaching new highs and major institutions pivoting toward ETH, the crypto market might be preparing for a big shift. Right now, ETH is holding steady at around $2,400. That might not sound exciting, but for traders, this level is key.
Analyst Mihail van de Poppy recently pointed out that as long as ETH stays above this support range, there's potential for a strong continuation toward the next resistance band,
which sits between $2,700 and $2,900. And while the price has been underperforming compared to Bitcoin over the past year, sentiment is starting to turn.
On Polymarket, traders now give ETH a 31% chance of reaching $4,000 by the end of 2025. There's also a 19% chance it hits a new all-time high of $5,000. And according to a more traditional source, CoinCodex is predicting ETH will go above $4,600 before the year ends.
These aren't wild bets. They're based on what's happening beneath the surface. Let's take a look at on-chain data. On June 25th, Ethereum processed 1.75 million transactions in just one day. That's the third highest daily total in the network's history. This kind of volume hasn't been seen since January 2024, just before a major downtrend began. And it's not just basic token transfers. These transactions include decentralized finance operations, smart contract calls, dApp interactions, and infrastructure-level adjustments. Crypto quant analyst Carmelo Alemán pointed out that this jump in usage is likely tied to multiple factors,
including increased arbitrage activity between Layer 2s, protocol updates, and users flocking back to DeFi.
Layer 2 networks like Arbitrum and Optimism are absorbing more and more of the total activity. And that's strengthening Ethereum's position as the foundation of the decentralized ecosystem. But it's not just retail users showing interest. Companies are making moves too. BitDigital, a publicly traded firm that used to focus on Bitcoin mining,
is pivoting entirely to ETH.
As of March 31st,
they held over 24,000 ETH,
worth around $44.6 million, along with 417 Bitcoin. Their plan is to divest from Bitcoin,
convert those holdings to ETH,
and redeploy capital into staking. This is a major shift in strategy, and it highlights a broader trend. Post-halving, Bitcoin mining is less profitable.
ETH staking, on the other hand,
offers consistent returns without the energy costs or infrastructure overhead. This isn't just about one company. It's an early signal of a wider movement. Ethereum's staking model, combined with its modular architecture and roll-up-centric roadmap, is making it more attractive to enterprises looking for reliable yield and lower volatility. As protocols continue to optimize for gas fees and execution speed,
ETH becomes even more competitive.
Meanwhile, institutional investors are steadily accumulating.
ETH-based ETFs have now seen 9 straight weeks of net inflows.
If the trend continues, we'll see 10 weeks in a row. That kind of consistency is rare, especially in crypto,
and it points to growing confidence in ETH's long-term potential.
It's also worth noting that this institutional flow is happening even as prices remain relatively stagnant. That tells us that big players aren't chasing pumps, they're positioning themselves early.
They're likely betting on ETH's fundamentals to drive the next wave of growth.
So what does this all mean? We've got network usage spiking, major firms shifting strategies, and institutions quietly building positions.
ETH might not be exploding in price right now,
but the groundwork is clearly being laid. And remember, this isn't about hype. It's about data, behavior, and long-term strategy.